TV.
Interest rates to remain low, but that's our title tonight on Property Avenue WA. Would you believe episode 70? Really looking forward to tonight. Our guest, Jordan Ralph from Mountway Finance. Jordan operates up north and he up in Karratha, in fact. So we will be talking to him about the Reserve Bank announcement today with low interest rates, and more particularly, what then will occur when it comes to trying to keep the housing market sort of, I suppose, stable a little bit. There is concerns about a few things, about the values, etc. So they're the things that we're going to talk to Jordan tonight. We'll get him on about 8 o'clock. In the meantime, I'm TV, he's Oscar de Souza, and we, between the two of us, we will have a chat about a number of things, but more importantly, we will also talk to OD and he will review the rental and the sales market and give us a few stats of what's been happening in the week. The whole purpose of Property Avenue WA is really, it's your West Australian property podcast and live stream, which we do tonight. We talk to WA property managers, we exchange our thoughts, we give our observations and our opinions, we enjoy the odd laugh, and we provide you with some tips and some directions with what we could maybe be able to help you with when it comes to property matters. Might be selling, might be deceased estates, you might be a first home buyer. We don't do that in every program, but there's all little snippets that might just help you. And if you've got someone that you know, we'd love you to share our podcast or share our live stream. And we're not the best when it comes to marketing because we've been too damn busy. But it's not a money making exercise. It's something that just the two of us enjoy doing, and we've now been doing for nearly over 18 months now. So it's something that we just enjoy doing, and probably need to make people a bit more aware, but we'll do that in due course. So tonight, we'll not only will we have Jordan, but we'll also do, as I said, OD stats. We'll do what's on the notice board. Oscar loves what's on the notice board. We'll discover the answers. I do have a question which is associated with a private sale. Someone is looking at selling their property privately and asked a couple of questions. So if we have time, we'll get to that. And of course, let's discover the answers, and we'll also do property headlines. A couple of interesting headlines that thought we might raise, although a couple of those we might include with our discussion with Jordan. And then, of course, I always enjoy asking Oscar the if question, just to keep him on his toes at the very end. So that's what we're all about. That's Property Avenue WA. Mate, welcome, and how's your week?
Good evening, TV. Good evening, viewers, and also listeners as well. Been a great week so far, TV. I mentioned to you off air just before that for the first time in probably a month, I've actually started to feel a bit calmer and more in control of my own personal workload. And obviously, as you know, I'm in the rental space, so it's a very busy property management market. It's a very busy WA real estate market, but I don't know. For a while there, it almost felt like it was getting away from me a bit, and that happens to business owners or employees as well from time to time. But I'm actually feeling a bit more in control or on top of things, or I've got my finger on the pulse whereabouts it should be. So everything great out my way, mate. Nice and under control. The real estate market, though, both the rentals and the sales market, is definitely not under control. It's a very, very busy space in both areas of the market, as we will uncover a bit more over the next 10 or 15 minutes. But other than that, mate, great to be here, and everything's good out my way.
Hey, now that the rugby's done, the AFL football done, then I heard briefly, because I've been running around, I'm probably the opposite to what you are at the moment. I don't feel like I'm under control at the moment at all, but I'm working on it. But I heard that whisper that the Test cricket might not be, the Ashes might be a bit of an issue here. So, because I think that's really the only, I sort of haven't really been keeping tabs, but there's a bit of a lull now that all the footy finals and everything are over. Then there was a suggestion there might never be any test cricket, so that'd be a bit of a blob if that wasn't to happen. So
I haven't heard that though. I haven't heard that. Did you? Where did you hear that, mate?
As I said, only in passing. I probably need to go and check my facts, but I just heard something in the background as I was racing around like a headless chook tonight, and I thought, oh, that just But I haven't. I thought you might have known something more, but anyway, it doesn't matter.
No, I don't know anymore, and I really don't want to know any more about that topic because that'd be an absolute tragedy.
It would be. Hey, listen, just quickly, because we're going to get Jordan on about 8 o'clock. I will just do the disclaimer because I think that's very important. Yeah. And I will tell you our general advice disclaimer. The information on this podcast live stream is to be regarded as general advice. Your personal objectives, needs, and financial circumstances were not taken into account when preparing this content. I love it. I've got that right about 4 weeks in a row now, 4 episodes in a row. Yeah, we always advise and recommend you seek personal, professional, and financial advice tailored to your specific individual needs before making financial, property, and investment decisions. And as I say, our guest tonight, Jordan Ralph from Mountway Finance, he's a classic when it comes to he's the sort of person we're talking about when it comes to seeking professional advice, and that's what he's about. So that's our disclaimer, mate. I really think, without further ado, we should just move on. If I find your little clip, and I think we should do OD stats. It's over to you.
Excellent. Well, mate, without trying to sound like a broken record, and I really just don't want to do that, I seem to be saying the same thing week after week, and that is particularly now that we've just moved into October. So that first week, that first month that we've had of the spring selling season here in WA has really gone off with a bang. It's gone off exactly the way that we expected it to. The real estate agents are reporting a spike in buyer activity, lots of buyers out. The amount of time it takes to sell a property is getting shorter and shorter. And the number of listings on the market, we're at an all-time low for the entire year. So the real estate sales market really is hot. In the last 7 days, there's been 828 sales. This time last year, in the same week, there was 827 sales. So we're bang on the volume of sales where we were at this time last year. And
did you say 820? Sorry, did you say 820 sales? 828. Okay, so pretty much spot on, exactly the same as last year.
Yeah, that's right. And, we've been seeing anywhere between 800 to 1,000 sales each week over the last 6 months, and that includes through winter. And that's a very, very busy market because when we've been in Perth's normal residential market, we're normally looking at 500 to 600 sales. And that's when the demand and the supply are closer to normal, closer to meeting. But for the last 18 months, basically, as we bounced out of COVID earlier last year, our WA market has really gone crazy, as we're all well aware. And our sales volumes have been consistently above 800 sales every single week. So we're right on par to where the expectation is. But our listings are down. Right now, there's 8,360 listings available through Perth. And that number's actually down. So we need that number to be a lot closer. We normally want it to be between 10 and 11,000 listings. But again, it's well down from where it needs to be so that the supply can actually meet the demand. In contrast to this time last year, there was 10,435 listings available in the same week last year. So that is bang on 20% lower in the availability of listings than where we were at this time last year. So, sorry, I don't know if I said that right. Today, we've got 20% less stock on the market than this time last year. And this, again, we were in the spring selling season at this time last year as well. So, there's just no letting up for the sales market. And I really do think that as we approach, the remainder of this month and also November as well, I really do think that if anything, things are just going to get busier. There's nothing letting up at all, and the interest rates remaining on hold, which we'll unpack a bit later on in the show, is only further confidence for buyers to get out there whilst money is really, really cheap, and to make that next property move, whether it be for an owner-occupier or, in fact, an investor. The rental market.
Sorry to interrupt you, while we're hot to trot, is that I suppose drop in listings, is that people hanging fire and waiting to see what progresses, or is that a bit of a combination of a few things?
Matt, I don't think so. If anything, we were expecting to see a bit of a spike in listings, as in that number of listings would come up from the early 8,000s to maybe the high 8,000s, or maybe even touch 9,000, because that spring selling season that I talk about, normally winter is a little bit slower, and we see a lot of properties come onto the market for the spring selling season. But right now, I don't think there's as many properties coming to market, and the ones that do come to market get sold really, really quickly. And by that, I'm talking about within the space of 1 to 2 weeks, properties are selling, and often, they'll actually sell within the first week. So, I don't think it's a case that people are sitting on their hands and waiting to see what's happening. I think it's that the transactions are happening just really, really quick.
Yep.
And there's just lots of demand for a very short supply of stock. Back to the rental market, again, super tight in the rental market. The number of properties leased is actually dropped quite a bit. We're down to 554 in the last 7 days, and this time last year it was 621. But normally we're seeing our rental listings, or the number of properties leased, between 700 and 800 properties per week, and often it's been up to 1,000 properties per week. But we've seen over the last 6 months that 1,000 number actually dropped down to 900 to 800 to 700, just not because there's not people out there renting properties, but we simply don't have the stock out there to advocate that number, that volume of leasing transactions. So it's down to 554, but more importantly and probably concerningly, there's only 2,236 properties available through WA at the moment. Compared to this time last year, there was 2,959. So that's 24.5% less stock today than where we were at this time last year. So, and we knew that we entered a rental crisis from the middle of last year onwards, and that rental crisis has only further increased to be 24.5% lower in stock today than where we were at this time last year. Just with my own home opens that I've been doing, and the other offices that I work with that does leasing as well. There's just big numbers coming through home opens, many applications, often before people even see the property, and the competition for just about any available rental is really, really high. So no let up in the rental market, and it's really, really hard to see as well, because with every property there's always many people that miss out, time and time again, they keep applying for properties, but it's not because their application is not a good application, but only one person can obviously get the property. So it's a bit of a painful story out there. And finally, for those of our Geraldton fans, as at today, there are 50 properties available in Geraldton for anyone that's looking through the whole of Geraldton. 50 is not a big number. That number should be somewhere between 150 to 200. But Geraldton's also experiencing a high shortage of available rental properties. And just like I said, here in Perth, people missing out. That's exactly what's going on up there as well. So it's good for the sellers, TV. It's good for the landlords. It's hard work for the buyers, and it's more hard work for the renters out there at the moment.
Yeah, and you talk about Geraldton. It's it's interesting because I had a friend the other day who contacted me. They sold their property. They listed it. It was gone in a week. He just about fell out of his tree. He went, "Oh my God!" He said, did we put it on too low or whatever the case was?" I said, "No, I think that's just the way the market is, mate."
Yeah. That's
So
right. But then it can often create, if people weren't anticipating it to sell so quickly, and then they've got to get out of there to sell the property. But where are they going to go?
Yep. Well, I think in this case, their plan is to go south, and suddenly those plans have got to be changed a bit. But they certainly got a rude shock when they realised how quickly the property sold. And that's not the first time I've had that comment made to me either. It's interesting times. Although that being said, I had a phone call today from someone who was inquiring with me and felt that their house had been on the market for quite a while and nothing was happening.
Wow.
And so I don't know the full story there, but it was just an interesting observation. Now, I don't know the condition of the property. I don't know whether they've got a ridiculous price on it. In fact, I know very little, but it was just a comment that was made to me in discussion with a client of mine, and they were talking about a friend, and it was just I was quite intrigued to think that, and the location we're talking about, because I'm up in Geraldton at the moment, as you know, and the location or the suburb that this property is in is what I would have thought would be in demand.
Right.
But as we all know, there's two sides to every story, so I don't know the full details. But it was just interesting because certainly most people I'm talking to at the moment, including people that have had their property on for a while, and I mean a long while, suddenly they've gone, they've moved, they've done. So hey, that's really good. What say we get our guest? He's up and running. I can see him in there. How about we introduce our guest, do you think?
That'd be great.
Okay. Mate, Jordan Ralph. Hello, my friend.
How are you? Yeah, it's been a long time. How are you, Tony?
Yeah, I'm good, mate. Good to see you. Yeah. And you've not had the pleasure, I don't think, of meeting Oscar before, but OD, now you know who Jordan Ralph is.
G'day, Jordan. Mate, I've certainly
you quite a few times.
I've heard your name as well.
Come on, please. Sorry, I beg your pardon. Meet Oscar. He wants to be in the scene, but just got to keep your voice down, please, mate.
Who's that? He wants to meet me too.
Oh, okay, hi.
Yeah.
How are you?
All right.
But certainly a familiar name, Jordan, and can't wait to chat to you a bit more over the next half an hour about everything finance and everything the Northwest.
Excellent. Sounds good.
Hey, George, thanks for coming on board. And for those that aren't aware, so George's background, we first met some time back. In fact, we didn't meet in person, but we had a lot to do with each other due to our we had mutual clients, and when George was the manager in Westpac up at Karratha, and then he decided that he was going to do something on his own, and of course he's now got established Mountway Finance, and I know we had a conversation around about COVID time with the two of us going, bloody hell, what are we going to do here? This is not looking pretty. And I think since that, not long after that, George's been a pretty busy chap. But George, that being said, I just realised today you were my first guest when we first started Property Avenue WA, which was May last year, was our episode 3. I just happened to it came up in a memory or something. So there you go.
Yeah, and the scene has moved along quite well. You've got this set up really well nowadays. I remember that because there was still a lot of disruption. And still a lot of concern about where things were going and what things had happened. And I think at the time we were talking about some of the help that the government were issuing at the time, and it's probably not a bad, segue into what you're talking about tonight, because 18 months on almost, we what that looks like now. Yeah.
Well, and which gets me to the point. I mean, and And I really appreciate the fact that it was only I just sent you a message to say hello because I hadn't spoken to you for a bit and see how you were going. And then with the headlines in the papers about, or on most TV and radio about the interest rates remaining low, I thought, oh, well, at least ask the question. So thanks very much for such late notice to say, yeah, I'll come on board. But interest rates being low and remaining low, where do you see this going now?
That's an interesting question. The RBA, I think, is in a little bit of a tight spot here, but they've held their line pretty well, because this is obviously now part of the ongoing property story. It's never been cheaper to borrow. Interest rates have never been lower. All of the lenders have adjusted their buffer rate, which is what they use to assess loan applications on, and they've all come down too. All but a handful of lenders have adjusted downwards. So your purchasing, your borrowing power is also never been better. And whilst initially the surge in Perth particularly was attributed to returning expats coming into the city, now it seems much more speculatively driven, particularly all around the country, where people are essentially buying houses on their purchasing power. Now it's great for people who are selling houses. It's great for people who are fetching rents and things like that. But it is an issue, I think, that the Reserve Bank is seeing, that house prices are driving up based on based on purchasing power, and that isn't a fundamental driver. It's not a supply and demand problem where that would normally cause increase in prices. And so as more and more people sort of go into the market in a jet-fueled price increase, you have greater sensitivity as soon as those interest rates start to increase. Now what that means is, potentially these rates, we're going off 0.1%. We go to 0.25% firstly, so that's more than double what the base rate is, and then we're looking at 0.25% increases thereafter, and that will change the game quite significantly for borrowers who have priced everything in at that lowest rate possible. So for example, 2.5% is a good owner-occupier rate at the moment, but let's talk investor rates. 2.75 is a good rate. There are lower rates, but if you go up to 3%, your interest rate increases by 3%. That's not just a 0.25% increase. That's actually, a large increase on what you're already paying, and potentially could cause problems. But I think what the RBA are doing is they're starting to talk about there should be some other measures to deal with people borrowing too much money. They shouldn't be determining their monetary policy based on the housing market, but based on wages growth, and they aren't seeing wages growth yet. So they're in a tight spot, but I think they're sort of signaling that government needs to do some part here.
Yeah.
Sorry, Jordan, did you just say that the government is not yet seeing wages growth?
No, nothing significant. But I think that's got to be a mixed picture. I mean, the only thing we've been hearing, particularly in the northwest, but also in Perth, is that it's so hard to get people. And if you haven't got people, your wages will grow. So part of that story is that some of the roles that were filled by visa holders are just not there because those people have left the country. Part of it is that we can't get people over from east for certain roles, like what was happening before. I don't think the JobKeeper story is really happening anymore. I mean, it's obviously ceased, so anyone who was encouraged to stay home and not go to work, that wouldn't be part of it. So, the only other thing is that industry is driving along and it just can't fill the roles that it's got available. If that's going on, then we should expect to see wages growth. But I think what's offsetting it is, your your event sector, hospitality, anything which is people facing, and has been shut down, particularly in the east, since it's such a big market. Yeah, so maybe we'll start to see that as things open up. Therefore, the Reserve Bank might start to look at increasing.
Yeah. Well, I mean, a couple of things on that. I mean, I would have thought that, and it's a good point. I mean, if you look at what's going on in the eastern states and the lockdowns and everything that most of the eastern states has had, if that data gets brought into the data to determine wages growth over the last 6 months, for example, obviously that's going to have quite a handbrake effect on it. But I would have thought that the Reserve Bank at least should be aware that their data is going to be contaminated if they're going to look at wages or jobs that are in an area that's been locked down for so long. And maybe a better assessment would be to look at WA, not necessarily exclusively, but we've obviously had an unaffected economy over here so far as lockdown's concerned. But then the argument would be, but we've also got the mining sector and we can't fill the jobs. And for those people that are going into the mining sector, they're leaving hospitality, they're leaving the real estate sector, and sometimes health as well. So maybe we've got our own bit of contamination in terms of the data. But what other question was I going to ask? I just had a bit of a memory blank, but it was
that's right.
It was just along the lines of the government determining. That's what it was. So once the Reserve Bank does get its head around wages growth and where wages growth actually is, are you saying that they're going to use that as an input in determining the next time that we will see an interest rate rise? Yeah,
I do think so. I mean, their signal is that it's still some way off, and they've talked about wages growth before, and it will be a while before you start to see this reflecting in data. For starters, I mean, growth is always comparable from one period to the next, and they want to see something that's reasonably sustained. So we're talking sort of like perhaps half a year's worth of strong growth. So that whole delay effect means that it's still some way away from seeing this. There's always a reasonably good lead in the fixed rate market when you're talking for home loans. They're driven by banks. Banks are driven by where they get their money from, and those are always speculating on where the Reserve Bank will go. And they probably read the Reserve Bank commentary with a far finer tooth comb than I've got. But the 5-year rates have always been sort of significantly higher than the 2 and 3 year rates currently. But the 3-year rates are starting to move now.
Right.
Okay. Yeah, and that's not to say that a rise is due in 3 years. It's that there will be rises on the way through to 3 years. Yeah. So that we can more or less expect, if those fixed rate directions are correct, that we will be thereabouts or higher in 3 years' time. Yeah, gotcha. Yeah, I understand.
So George, getting back to with Reserve Bank retaining the rates, the governor is basically saying, well, the regulators need to attend to the regulation to control things, and a lot of that is being driven by, you pick up a paper, and hence why we do WA Property Avenue WA, is that the affordability of property on the East Coast, and this is what's driving this conversation big time. We still, as Oscar and I have been saying over the last few episodes, WA is still affordable. Not necessarily in all areas, but in comparison, it's still an affordable real estate market. It's still affordable for first home buyers to get into the market. That being said, if the rates remain low, then they're saying then that the financial regulators, the Council of Financial Regulators, will have to curb lending in some way. Now, the options being used, and you've already mentioned this about having a cap on the debt to income ratio. The other alternative is if there's is to increase the interest rate serviceability assessment, which they do, don't they? So, so how will they curb, and who's that going to impact on, more particularly WA market? First home buyers or investors?
They'll find a way to give the first home buyers a break. I have been fairly happy, I suppose, with how the lenders on large have addressed first home buyers. There are some easement of the general rules. So and the last time they felt markets were being too heavily heated, it was in Sydney and Melbourne. They did address the investment sector first. The first thing they did was increase the gap in the actual interest rate that applied between owner-occupiers and investors, and they might do that again. These are always a little bit of a first mover who wants to sort of take the hit first question. I mentioned, for example, some lenders have stayed with pre-COVID servicing rates that reflected an interest rate, 1.5% higher.
Yep.
And now I don't doubt that they have not collected as many new home loan deals as some of the lenders that have allowed their servicing rates to drop, because it just means that more borrowers don't qualify. So I mean, there's a couple of aspects to the question there. What are lenders likely to do if they want to take this into their own hands? Good question. It's whether they think they need to take it into their own hands or without some push from the government. The way it stands, and the way it always has been, the reason why there's always been plenty of money to put into housing markets, and this suggestion that Australian housing has always been overpriced compared to the rest of the world, is because when banks lend against a house, they get a particular capital treatment, which is provided by APRA, which is a prudential regulator for banks, and that allows them to essentially make more money off that lending than a comparable loan for business lending, for example. And the way it works is, for every loan, they need to allocate a certain percentage of that loan as capital on their balance sheet. That percentage is lower for a residential lend than it is for a business lend. And what that means is they've got more capital to deploy for other loans. So they essentially can do more lending in the residential space. That hasn't changed. There's been no talk of that changing. And so, it'll be a big move for a bank to self-limit, because they haven't really there's no evidence of them doing it in the past.
Yeah, right.
So if they were to self-limit, I'd imagine it would be in the investor loan market firstly, via an increase of the difference between their owner-occupier and their investor rate.
Yep. So the situation being is, are the rules different for regional WA compared to Metropolitan WA when it comes to the finance side? Because there's been plenty of talk over a long period about postcodes. And I know I've spoken to banks back in the time with regard, and they go, oh, no, we don't consider postcodes. But that's not quite correct, is it?
No, not at all. There are a postcode list for all of the major banks, categorised from 1 through to 4. 4 essentially means will not lend. Many mining postcodes are 4 or 3, 3 being limited loan to value ratio. What that means is, if you're a borrower in those places, you need to come up with more capital, and that includes first home buyers. So where, for example, there are concessions in cities that allow first home buyers to get into the market sooner. For example, they allow gifts, grants, different things as your deposit. They, in some cases, allow smaller deposits. Those things are not available in regional areas. the other thing that's relevant is that your choice of lenders is more limited. So there are many lenders that will only lend in metropolitan areas, and there are even a handful more that will not even lend in Western Australia. They are purely eastern states lenders.
Won't lend to WA?
Won't lend to WA.
Really?
Yeah.
Even in this market? Even in this market?
Yeah, correct. And sometimes that has to do with risk appetite. Sometimes that has to do with the size of the bank and where they can reasonably, service people.
Yep.
But in terms of lenders who are particularly focused on metro areas, that's a risk appetite matter. So they'll have a view that, they're only happy with security in those areas. So if you wanted to borrow in Geraldton, your pool of lenders is slimmed down. And likewise in Karratha, even more so.
Yep.
Jordan, can I ask you a question? A slight change of topic, though, moving a bit away from the finance and more to the real estate side, then of what's happening out your way now. So you're in Karratha?
Yeah.
Yeah. Okay. So can you tell me a bit about the rental market in Karratha? What type of conditions have you got there in terms of supply and demand and growth?
Look, it's very tight, and I was sort of waiting in the backstage as you were talking, Oscar. Interesting numbers. We've got similar numbers here. The numbers are moving all the time. It's something like 37 properties for rent in Karratha.
In the whole of Karratha?
All of Karratha.
Wow.
And then this is a town with something like 6,000 houses. And about, depends. I mean, on the population-wise, if you're talking the city of Karratha as opposed to greater area Karratha. It might be about 15,000 people. Nonetheless, 37 houses. It's been like that for a while. We're not actually seeing a huge turnover of sales, and I think that's because people are holding on to houses to either maintain a high rental yield, or because much of the activity I've seen in the last 18 months, indeed even before COVID, 2 years, has been owner-occupiers buying in Karratha, usually renting and deciding to buy. That's a really good thing, but those people now aren't turning over their houses. So those 37 places to rent, generally as they get rented, there's not a whole lot more backing up in the pipeline.
Yeah, and as the rents have been going up over the last 12 months as well? Yeah,
absolutely. Yeah, a lot of that. And there's obviously a fairly large delay. We had to wait until March until the state government did their restrictions. Yeah. And then, these dates started to roll off, these lease end dates. But there's been a fair bit of a rush, and what we're actually seeing now is people who have not been able to cash in since March and are only seeing a lease expiry in these months. They're jumping up $400 a week sometimes.
Wow.
They're jumping up by $400 a week.
By $400 a week. So a house that was renting for $500 a week, because that would have been a decent rental during the quieter times of the years gone by.
Yeah.
Now the landlords are taking every opportunity to make up for that.
Yeah, right.
You're often talking.
Sorry, mate. Yes.
Yeah, corporate rentals are common up here. They don't entirely flinch at prices like that. And that makes it very difficult for anyone who is not working for a big mining company or for a major contractor.
Yeah, I would have thought so. I mean, for people that are just normal Karratha residents that just need to rent a property to try and compete with that sort of a corporate rental, you almost can't do it.
No, you can't. It's very tricky, and a lot of people I see lately have been caught off guard. They're looking to buy because they want to stay. They definitely cannot afford the rent, the economics of buying and paying a mortgage make a hell of a lot of sense in this market, particularly with low interest rates. So they're prepared to do it, but because they've been caught off guard, they're not really financially in a position to do it.
Right. Yeah.
And that's also compounded by the lending rules, which are specific to mining cities, mining towns.
Yeah.
Lower loan to value ratios being the main one.
Yeah. And has there been a significant change in that lending criteria from, I guess, the last mining boom that we saw, when obviously there was a lot of pain when the iron ore price dropped so much, and therefore the real estate market dropped? So has there been massive changes to your lending criteria now?
Yeah. When I came to Karratha, working for Westpac, and then started Mountway Finance, it was a couple of years after that period, and you could say that it was the town had hit its bottom and was just trying to shake it off and slowly recovering, and things have really boosted quickly since then. The policies adjusted very quickly on the way down, and they haven't adjusted quickly at all on the way up.
Right.
So what was in place when I joined the bank, and now working across multiple different lenders, it hasn't really changed. From it's now 3 years. I've been in Mountway Finance 3 years.
Yeah.
So even with the more positive environment here, more buoyant housing market, most of the policies that affect this area haven't changed.
Yeah. Right. Okay. Right.
Yeah.
Hey, George, and what about values? And we talk about the iron ore industry and the impact of prices, and of course Karratha, Port Hedland, and all that. The Pilbara region is very much reliant on the mining industry and iron ore in particular. Now, how is that going with values? Because I know we've certainly done some work for a few clients of yours in the past where they've been happy to get into the market. How does that compare now over the last 12 months when it comes to values and the iron ore industry? What impact's that going to have?
Yeah, look, the values it did steadily rise for a little bit there. They've sort of plateaued, I think, largely because the turnover isn't there like it was. We're talking about 6 months, so I'd say for the 18 months prior to around about April, May this year, the values were rising, but it has sort of plateaued since then. People are still keen to get in because they're driving their decisions based on rental. So they're looking to get away from a very tough rental situation. So they are still prepared to pay the elevated price. A lot of people believe the market will rise higher. It's not so much driven by iron ore in Karratha. The story so far has been about that. There has been plenty of investment from Rio Tinto in particular, sustained investment. They essentially worked out that they had so much infrastructure that they couldn't afford to stop maintaining it, and that maintenance schedule is huge. Hundreds of kilometres of train line, processing plants, trains, several mines, roads, the works. So that's whether the iron ore price goes up or down, you'll still see that kind of activity. So that's always there, and it has driven in some way, sort of a mild recovery off the bottom, say 2018. But I think the big story has been the interest and potential announcements from Woodside on their Pluto 2 project, which is off the top of my head, I don't know the numbers of billions of that investment. That's a big one. And several other mines, hydrogen-related things, methanol, a mix of heavy industrial projects that are not all in the iron ore space, which amount to something like 65 billion in investment. And they're all in a state of it's nearly there.
Yeah.
and we're waiting on announcements. So I think there's been a little bit of speculative activity on the back of that, and that includes companies who are gearing up for this wave of work, and are therefore taking up some of the housing stock.
Yeah.
So I think the plateau, for example, has been because we haven't had the turnover, and because people are waiting for these announcements now.
Yeah, Jordan, I really do admire the background music that you've got going on there.
I didn't know how much you could hear that.
It's very nice. It's like I'm on hold, but I'm listening to your voice at the same time. It's great. But the other thing I was going to ask, or one of my last questions, is just so far as investor interest. So as opposed to owner occupiers, is it notable the amount of investor interest because they can see price rises and they can obviously be satisfied that they're going to get a very good rental income? So is there a notable amount of investor interest in property up there?
Yes, there is. But I think there is more of it in Headland than there is in Karratha. Headland seem, they're not the exact same story. Headland is very much more dominated by iron ore, particularly since you have three major players bringing their ore into the port. And similar driver there in terms of this infrastructure that needs to be maintained, and that is creating a long-term pipeline of activity. But then there's other things there like the Port Hedland area, which is right near the port, has had this dust issue for a number of years. The government has decided that they'll initiate a buyback of houses in that area. The buyback is very fair, so people are willing to participate. But what that means is they need to move to other areas of Hedland. The building activity isn't really keeping up, so prices are rising very, very fast in Hedland. I'd say there's more speculation going on there, and investor interest I take, as an indication. Momentum Wealth, fairly prevalent Perth-based wealth fund, investing in property. They're only foray in the north at the moment. There's two funds. The first one is focused on strictly existing stock in Hedland, chasing rental yield. And their second fund is also Hedland focused, around a specific unit development, but it's already built. So they're just sort of purchasing built things. They're not adding to the stock. They're just there to take the rental yield. So that kind of investor interest is there, I suppose, for the clued-in people. But they're certainly milking it. I mean, I think that they don't intend to be there any minute longer than they have to be.
Yeah, sure. Yeah.
Hey, Jordan, I know we only said we'd get you on because I know you're busy, and I admire your ability to be able to hold a conversation with your kids all doing and wanting your time, etc. in the background. I think you're doing exceptionally well, mate.
It's funny. It's just this is an example of a Karratha house. It's only a 3x1 with 4 children running around. My office is also their room. It's a tense relationship sometimes when I've got serious work to do, but this is my fellow
Mate, you're doing. I admire you big time. Yeah, Oscar quite often has to get kicked out of his room as well because he's got one of his daughter's rooms that he does a bit of quiet time in. So I'm a bit spoiled. I'm at a stage of my life where children don't live in my home, so I'm a bit spoiled. Hey, listen, just quickly, the other thing that I was going to ask you, I know it was about 12 months ago now, you and Brendan Grills were doing something with regard to FBT.
Yeah, I'm glad you asked.
Pardon?
I'm glad you asked about that.
Yeah, I know we don't have a lot of time, but just quickly, how's that progressing? What would you like to just give us a little bit of a as I said, we're running out of time, but if you don't mind, have you got a minute?
No, that's all right. If I can't provide an elevator pitch about this strategy, this campaign, and then I haven't really been paying attention. So you're right, Brendan Grills, whom you might remember as the former Nationals Party leader for WA and also Deputy Premier. He's now a Karratha resident and a consultant up there, and that was based on after he finished his term in Parliament. That was his seat. He enjoyed being there, saw opportunity, decided to stay. And we got together to talk about housing problems in Karratha, in Headland, which we noticed. And there was also similar issues in the Shire of Ashburton and also, Tom Price, which is part of the Shire of Ashburton, Newman as well. So basically what you have here is it costs too much to build a house. So no one does it. And the only time you ever get building activity is when there's a boom on and it's sort of like a rush to the door. Everyone tries to build all at once. It doesn't happen fast enough. Property prices skyrocket. And then by the time you start to get that stock online, that's when the projects are finishing. That's exactly what happened in the last boom. We started to talk about a strategy that would see more sustained stock replenishment throughout the cycle, throughout the mining investment cycle. And what we did is engaged all the places in Australia where we saw this happening. So, like I mentioned, the WA councils where that was going on. There was also Mooroombara in Queensland, Mount Isa in Queensland, Broken Hill in New South Wales. And we got them all together. Kalgoorlie as well. We got them all together and all were in agreement that this was a problem in their towns. And all were in agreement that they wanted to support something that would address this issue, this cyclical housing issue. The FBT refers to fringe benefit tax, and it is a tweak to the tax policy which we proposed with the support of all of those councils to the federal government. And it essentially will allow an individual who buys or rents a house in these places to use their pre-tax income to pay for their mortgage or their rental costs. And for just to take all the sort of the tax jargon out of it, because there's a few twists and turns about how that works. But essentially what that means is if you're being taxed at 30 cents in the dollar, you get 30 cents in the dollar more that you can put into your mortgage or rent. So your purchasing power increases, your cash in hand after housing costs increases, which means the incentive to invest in these markets increases also. So we saw it as a long-term cycle smoothing strategy, and it's been financially supported by these councils so that Brendan and I could launch a campaign. The campaign is called More Than Mining. There's a whole bunch of work that went into that campaign to get the messaging right, which is we still want the investment. It's good for the state, it's good for the country, it's good for the local communities. The other side of the coin, obviously though, is that it does hurt people to have very cyclical housing markets, and it does hurt those regions in terms of all of the other things that come out of that, like the varying lender rules and things like that. So we launched this campaign with a set of messaging to make it positive and constructive. It got the attention of local media in all of those places. We've also got a social media campaign that each one of these councils can drive on their own. And that was phase one, that was launch. We're now looking to move into phase two, but we're currently asking for these councils to help us fund into that stage two, which will essentially maintain the media campaign and get us into federal parliament. In terms of influencing politicians, we've got Matt O'Sullivan, our Senator for Western Australia. He's a Liberal Senator. He's taken great interest in this. He's very clued into the policy and how it can work and how to get it into the likes of Treasury with the right set of glasses, if you like. We've got the Minister for Northern Australia, and I know there's some coverage there that is in Northern Australia, but Minister for North Australia, Minister for Regional Australia, they're taking notice too. So we're sort of at the start of getting this off the ground.
Fantastic.
Mate,
Yeah,
is there
very
something there that we could actually post and share on our Facebook page? Is there something you've got there that we could link that up?
Yes, there is. I can send you some things anyway, just offline, obviously, Tony. And then there's we have a website which will explain it all.
Because we'd certainly be interested in following that up and also promoting that and just seeing how that's progressing as things go. Because I think it's relative to what we're all about. So that would be really interesting.
Yeah, thank you. Yeah, I'm glad you noticed. Thank you very much. That's
No, mate. Hey, listen, just look at the time. I said to Oscar before, JR is a very knowledgeable bloke, and he's really really interesting to listen to, and you just proved that tonight, mate. It's been an absolute pleasure having you on, and every time I've had you as a guest, it's been I've really enjoyed it. So thank you. I'm just looking at time, but I have got one thing, mate, that we always finish with an if question, and I'm probably letting the if question be noticed in advance, but I'm going to ask you the if question before you go. If you were given a chance to go to the moon, would you?
Yeah.
Okay. Is there any reason why?
I mean, to look back and see the Earth, I suppose that'd be pretty special.
Mate, can't thank you enough because I don't want to keep you waiting. I know it's difficult because you've got the kids and everything else, but thanks again for being a part, and especially such late notice. I mean, what you covered tonight and the information you gave us was just sensational, and certainly we'd certainly like to follow up and be associated, even if we just our little bit of promoting what it is you're campaigning with regard to the FBT and that campaign, and maybe it's something we can follow up again with you in due course.
I'd love to. Thank you very much, TV. Thank you, Oscar. Very nice to meet you. And
you too, Jar.
And obviously, my son thinks so. Thanks for being good sports and us to be disruptive with the.
Mate, we've always said it's very laid back. We do it. It's not. It's something we enjoy doing. So it's good value. Mate. So our podcast comes out tomorrow. So you'll be able to listen to it again tomorrow.
Yeah, great. Fantastic.
Thanks, mate. Take care.
All right, you too. I'll catch you later.
Cheers, bud.
See ya.
I did say he's a knowledgeable chap, and I just looked at the time and went, wow, this is gone. But I will not. I think it's only fair. We can't not we won't be able to do our question tonight. We'll keep that for next week. And I think we'll do the property headlines next week, but we will do what's on the notice board, because I think
the notice board.
I just think we've got to have the what's on the notice board, and then we'll just finish. I've already preempted the preempted the if question.
No,
yeah, no,
my answer is no.
Oh, now hang on, don't preempt. Hey, what's on the notice board now? As we keep on saying, this is a segment. You've got something quirky, or you've got something you want to promote, be it your business, your kid's birthday, your mate's birthday, whatever it may, a sports day, then we would love to know about it, and we would love to talk about it. But I can tell you that Property Avenue WA, at least one of us is, going on a hike, Cape to Cape, next week. So we will do the show next Tuesday, and then in the car and off I go. But we're going to be watch this space, because we'll keep you informed of how that's progressing. And in fact, the show after, so episode 72, we'll be doing that somewhere along the Cape to Cape walk. And we might try, and we might try and get someone from down that way, be it in real estate or finance or whatever. And see if I can't find a guest, and see if they can come on board. We'll have a chat.
Well, look, I mean, I'm happy to volunteer you to go and do the walk, mate, and you can do the trip down south, and I'll just stay here. I don't want to, that I'll just stay back here in Perth and just make sure that just in case, because if anything happens, TV, I need to stay here to hold the fort, mate.
The only thing that concerned me is I had a mate stay with me on the weekend, and he's done it. And he said, "Oh, this time of the year should be fine." He said, "Just a few. You get a few tiger snakes, but they shouldn't be too bad." Tiger snakes. That didn't excite me. But I can also tell you that on the 1st of October, only a couple of days ago, was International Music Day. And I can also tell you that today is World Teachers Day.
World Teachers Day. Wow, I had no idea.
Today, 5th of October. And yesterday, and I was disappointed I only picked up on this morning, it was World Golfers Day yesterday.
Is that right?
World Golfers Day yesterday.
Who are these people that are making all these national days?
When you finish tonight, today is Do Something Nice Day. Now, I don't know, have you done something nice day today? What have you done today?
Nice today.
What's that?
I've done a few things nice today.
Yeah, I have. I gave my little princess a kiss and a cuddle, and I can tell you that tomorrow you'll be excited because tomorrow is National Noodle Day.
Mate,
National Noodle Day.
I had noodles for dinner tonight. I'm not joking. I had noodles for dinner tonight.
Well, so did I. We're ahead of our time. And I will also tell you that on the 9th of the 10th is the Dardanup Bull and Barrel Festival. And that Dardanup Bull and Barrel Festival, that is lots of stuff going on, wines and foods and all sorts of bits and pieces, and dog high jumping.
So my sister lives down there in right near Dardanup in a place called Ferguson Valley, which I think we've spoken about. So yep. I am certain, not that I've spoken to her in the last couple of days, but that sort of a festival, the Dardanup Bull and Food Festival or whatever, she'd be down there for that with bells on.
Yep. Well, there you go. So that's on the 9th and 10th. So, mate, that's what's on the notice board. And now we can, because we're running fast at a time, I think it's time to wind up. But before we do, let's do the if question. I should have done this for JR, shouldn't I? I should have played this for JR when he came on. So the if question, as I've already preempted, but the if question is, it's a fair bit happening with regard to going to the moon. It's becoming a bit of a regular thing. So the question I thought was, if you were given a chance to go to the moon, would you? And if you would go, why? And if you don't go, why?
No, I wouldn't go.
Wouldn't you? Right.
No,
why not?
Not at this stage. Maybe in 5 years or in a few years down the track. But at this stage, no, I wouldn't go. And the reason why not is because I would not have confidence that the craft that I would be going in is going to make it, and in particular, make it back. I mean, it might blow up on launch and all that sort of stuff, right? But the bigger concern would be getting to the moon and then the thing doesn't work or the GPS conks out or it doesn't start and then you can't get back.
Oh, mister, I can't believe you're that negative. No, well, my answer is I would go and I would be... on the basis that, well, I wouldn't be going tomorrow, but I'd probably do that after I do Cape to Cape, I reckon.
Yeah, right, okay. Well, again, mate, you go to the Cape to Cape, you go fly to the moon, and I'll stay here in Perth just in case, and I'll make sure that things keep...
You'll hold the place together. Mate, yeah. I listen, we've got to wind up because I'm looking at the time once again. Really, really appreciated Geordie coming on board from Mountway Finance, and as I said, really knowledgeable and always interesting to talk to. And mate, always appreciate your contribution. So have a great week. And for all those that do listen and maybe be on the podcast or you had a look at the video tonight or the live stream tonight, please share because we really want to get people to be aware of what we're about. As I say, it's not a money-making exercise. It's simply something that we're trying to do associated with WA Property. And if we can help you in some small way, send us your questions, be it on the live chat, be it on our Facebook page, be it on Instagram or be it on our Twitter. Always drop us a line and we will see if we can get some questions. And in the meantime, we'll try and find another interesting guest to follow up other than just OD and I. Mate, have a great week. And for all those people out there, have a fabulous week. Take care. And we look forward to talking to you all again next week. And happy house hunting. Take care.